A turning point. Bitcoin ETF, net inflows near $1 billion after 3 days. Since the historic approval of the first spot Bitcoin ETFs in the United States, the cryptocurrency market has been abuzz with anticipation and speculation. Now, with 3 full trading days under our belts, the data is in, and it paints a fascinating picture. Bitcoin ETF net inflows have surged towards $1 billion, signaling a potential turning point in the relationship between traditional finance and the digital asset world. This article delves deep into the significance of this milestone, exploring the factors driving the inflows, their potential impact on the broader crypto landscape, and the challenges that still lie ahead. Breaking a dam, the power of spot ETFs. For years, Bitcoin existed on the periphery of the financial system, accessible primarily through unregulated exchanges and complex investment vehicles like Grayscale's Bitcoin Trust, GBTC. This limited institutional and retail investor participation, dampening mainstream adoption and fueling volatility. The introduction of spot Bitcoin ETFs fundamentally transforms this dynamic. These ETFs track the price of Bitcoin directly, offering investors a familiar, regulated, and potentially more cost-effective way to gain exposure. Think of it like buying shares of an ETF that holds physical gold, but for Bitcoin. This ease of access, coupled with the growing institutional acceptance of digital assets, has unleashed a wave of pent-up demand. Investors who previously hesitated due to regulatory concerns, technological hurdles, or simply unfamiliarity with the crypto space are now entering the market through the trusted framework of ETFs. The numbers tell a story. The surge, VettaFi data reveals net inflows into spot Bitcoin ETFs exceeding 21,000 BTC, $894 million, in just 3 days. This translates to roughly 0.7% of Bitcoin's circulating supply finding its way into these new vehicles. Distribution of wealth. Leading the charge are the ProShares Bitcoin ETF, BITO, and Valkyrie Bitcoin ETF, BTF, attracting over $600 million and $200 million respectively. While the iShares Bitcoin Trust, IBIT, and Fidelity Wise Origin Bitcoin Trust, FBTC, have also seen sizable inflows, the initial focus appears to be on established players with proven track records. Outflows from Grayscale. Interestingly, Grayscale's GBTC has witnessed outflows exceeding $1 billion during the same period. This suggests a shift in investor preference towards the transparency and flexibility offered by spot ETFs. Looking forward, implications and challenges. The near $1 billion in inflows within a mere 3 days is undeniably a bullish signal for Bitcoin and the broader crypto market. It underscores the significant demand for regulated Bitcoin exposure and validates the long-held belief that a spot ETF approval would be a watershed moment. However, it's crucial to navigate the excitement with a level head. Here are some of the key aspects to consider. 1. Sustainability. Maintaining this pace of inflows is unlikely. Market fluctuations, regulatory developments, and investor sentiment will undoubtedly play a role in determining if this is a sustained trend or a temporary surge. 2. Volatility. Bitcoin remains a volatile asset. While ETFs may mitigate some of the risk through diversification and professional management, investors should be prepared for price swings. 3. Regulatory landscape. The regulatory environment surrounding crypto is still evolving. While the SEC's approval of spot ETFs is a positive step, further regulatory clarity will be essential for sustained institutional adoption. 4. Competition. With several spot Bitcoin ETFs now live, competition will be fierce, potentially leading to cost reductions and improved product offerings for investors. Beyond Bitcoin, a gateway to broader adoption. The success of spot Bitcoin ETFs has the potential to be a catalyst for the adoption of other digital assets. Increased investor confidence in the regulatory framework coupled with the growing sophistication of crypto infrastructure could pave the way for the introduction of ETFs for other promising blockchain projects. This would further blur the lines between traditional finance and the decentralized world, leading to a more interconnected and dynamic financial ecosystem. Conclusion. The near $1 billion in inflows into spot Bitcoin ETFs after just 3 days marks a significant milestone in the evolution of the digital asset landscape. It speaks to the pent-up demand for regulated access to Bitcoin and highlights the potential for broader adoption through trusted investment vehicles. While challenges and uncertainties remain, the initial data suggests that we may be witnessing the dawn of a new era for Bitcoin and its impact on the global financial system. This article is just a starting point for exploring the implications of this momentous event. As the dust settles and the market stabilizes, the true impact of spot Bitcoin ETFs will become clearer. One thing is certain: the tide has turned, and the future of finance may well involve a significant dose of cryptography.